Yeah, maybe the surprise of maybe 2025 might have been that the Treasury, 10-year Treasury ended where it did in the low four range rather than higher. And it traded largely in a pretty narrow range, certainly in the last 3 months of 2025, never breaching 5%, for example, throughout the whole year, and actually spending some amount of time post the tariff scare sub four. So as to what the Treasury might or might not do is anyone's guess. We're again not in the prediction game, but it does seem from some news sources that Treasury Secretary Bessent is certainly focused on how to really manage the balance sheet at the curve overall. And currently there's a great benefit of the deficit has been meaningfully not overall reduced, but as a percent of GDP has come down quite a bit. It was over 2 trillion at the beginning of 25 and ended 25 somewhere 1.6. So there's been a meaningful improvement of the deficit to GDP approaching the 5% level, so that if in fact the economy is growing around 5% and debt is only growing at the same level, there's less of a challenge in terms of being concerned about breakout of unsustainability of debt financing, and certainly the opportunity to potentially of lower front end rates to really finance the government's needs at the front end of the curve rather than longer could continue to support an environment that uh, allows for the 10-year Treasury not to necessarily track, as it some of us might think it should, the GDP overall. So we're not going to predict, of course, where the 10-year Treasury might be. I think anybody who's in the prediction business, we're going to resist the magic button that so many people use when it comes to predictions that fail. Then the magic button is the word if or until or yet. And we're not going to get into that. But it sure seems like we're in an environment where long rates are certainly below overall economic growth. Economic growth has been strong, but it's been supported by the ability of this government, whether it's through the DOGE actions, whether it's through tariff related revenue, whether it's even related to the revenue stream of people who have W-2s. The revenue stream into the U.S. Treasury has been 5% at W-2 level individuals and 10% overall for those who have like self-employed. So there's been a great inflow into the coffers of the U.S. government, which support at least not a breakout of rates. So it's so many variables involved that would seem to suggest that there's hope that maybe rates just stay again in a range-bound environment. But again, our job is to kind of react and observe the opportunities that we have on a day-to-day basis and invest capital accordingly, and certainly avoid making any sort of bets that depend upon a correct interest rate forecast.